as bold as Trump has been lately, it wouldn't be that big of a surprise for him to just get up one day and say, all right, time for a gold standard or something, some other kind of monetary system that is sustainable going forward. We haven't had a real recession since 2008 or 2009. So that it's time, just in the normal course of events, for us to have a couple of years in which the global economy shrinks and equities enter a bear market. That could pull down gold and silver too. So there are reasons for caution in precious metals, short term and maybe intermediate term. But in the long run, this is still a bull market that has a lot further to run. So, buy the dip is a very reasonable approach to precious metals. When you think maybe the end point of this process is $10,000 an ounce gold, then a drop from $3,000 to $2,700 is a signal for you to just buy a little more,
Bringing back the gold standard would be very hard to do, but boy, would it be wonderful, Donald Trump ventured in 2016. We'd have a standard on which to base our money. Now Trump appears ready to nominate Judy Shelton, an advocate of the gold standard, to serve as one of the 7 governors on the Federal Reserve Board. Market specialist John Rubino muses that Trump might one day boldly declare a return to a gold-backed system. He emphasizes that buying the dip is smart when the endgame could mean $10,000 in gold. In the middle of the chaos, Rubino notes gold's smooth breakout above the key $3,000 mark, defying expectations of strong resistance. He attributes this to non-price-sensitive buyers like central banks and BRICS nations preparing for a gold-backed currency. According to Rubino, Basel III rules making gold a Tier 1 asset also likely drove demand. Since March, investors have been increasing their holdings of gold, driven by concerns about the health of the economy and market volatility. Longer term, Goldman Sachs Research expects prices to be propelled by multi-year demand from central banks. Central banks, particularly from BRICS nations, are price-insensitive buyers accumulating physical gold, regardless of short-term price fluctuations. This creates a series of higher support levels that persist even without significant Western investor participation. In the meantime, Rubino warns that gold could be converted to $2,500 without ending its bull market. With currency debasement, inflation, and recession risks, the long-term outlook remains bullish. Regarding market fundamentals, Rubino cites Pan American Silver's acquisition of MAG Silver as a strategic move to secure valuable assets in a bullish gold market. In a deal that has already sent shockwaves through the mining sector, Pan American Silver Corporate has announced a $2.1 billion acquisition of MAG Silver Corporation. The transaction, structured as a mix of cash and stock, aims to bolster Pan American's silver portfolio through MAG's prized 44% stake in the Juanicipio silver mine in Mexico. Before diving into John Rubino's sharp insights from his latest interview, hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
You really would have thought $3,000 an ounce would have been resistance, right? Because that's such a big round number that you would have expected a lot of sell orders to cluster right there. And that every time the price touched $3,000 an ounce, those sell orders would have kicked in and knocked it back down. And we would have had like 2 years of bouncing off 3,000 before we broke through. Didn't happen. We blew right through it. And part of that is probably because there's some non-price sensitive buyers out there. The world's central banks, whether it's the BRICS for their future gold-backed currency or banks in general because of the Basel III regulations coming in where gold is now a Tier 1 asset. So banks need to own gold. And so I think they were just buying without a lot of price sensitivity. Then we finally got to 3,400 or so. And that turned out to be a place where there was a lot of resistance. A lot of selling came in at that point, and gold fell by a couple of $100 an ounce. It's up again today, but wouldn't be a surprise at all for consolidation to happen here, just technically, not looking at the rest of the unprecedented things that are going on in the world. When something has a nice run like this, creates a lot of profits that people can take, and so they protect their gains by selling a little bit and everything, and that causes a choppy market for a while. And it wouldn't be a surprise if that was the case for gold, where we go the rest of the year bouncing between 3,000 and 3,400. And you know what? That would be fine for the mining industry because $3,000 an ounce gold is super profitable for the big, well-run miners. And if that's the way it works out, then you definitely want to be owning the mining stocks because they're going to be reporting another couple of quarters of phenomenally good cash flow and earnings and revenue and everything. And probably they'll be attracting generalist money because of that. So, a choppy gold market would be just fine for now. The scary part for precious metals investing is that we get a serious correction, which in bull markets, you get those. So in a normal bull market, you can see gold to go down to $2,500 an ounce, and still be in a healthy bull market. And if that happens, then that'll be painful for a lot of people and, a lot of investors in mining stocks and a lot of stackers. But, we shall keep in mind that bull markets have corrections that shake out the weak hands. And in gold's case and also silver's case, the long-term trends are really positive because we're screwing up the big currencies of the world, and we can't do anything to fix that in the short run. So that means declining currency values, rising inflation probably, and that's a good environment for precious metals. So even if there's a big correction in the short run. Oh, and another thing that could cause a precious metals correction is an equities bear market and a recession, which those things are possible too. Equities are wildly overvalued. We haven't had a real recession since 2008 or 2009. So that it's time, just in the normal course of events, for us to have a couple of years in which the global economy shrinks and equities enter a bear market. That could pull down gold and silver too. So there are reasons for caution in precious metals, short term and maybe intermediate term. But in the long run, this is still a bull market that has a lot further to run. So, buy the dip is a very reasonable approach to precious metals. When you're thinking maybe the end point of this process is $10,000 an ounce gold, then a drop from 3,000 to 2,700 is a signal for you to just buy a little more. Keep on with the dollar cost averaging in both physical gold and silver and in the best miners, the miners that you want to hold for the long haul. And then don't really stress too much about all of this stuff because so much of what's going on is unknown. But one thing that is reasonably knowable is that we're screwing up the world's currencies, and that's great for precious metals. What happens in a precious metals bull market is that the big, well-run miners and a lot of the well-run junior miners, the producers, in other words, make more money, and they see their earnings go up, they see their cash flow expand, and they do things with that money. They raise their dividends, they buy back their own stock, they pay off debt, and then they go out and make accretive acquisitions. They buy other companies that can help them in some way. And if you're a big miner, chances are, in this kind of an environment, you're producing more than you're finding. In other words, your reserves are shrinking over time. So you need to go out and buy some reserves by acquiring companies that have already found enough gold and silver in the ground to move the needle for you. So M&A, mergers and acquisition activity, starts to ramp up. And we're seeing that now. We're in a fairly early stage of this process. But just lately, Pan American Silver bought Mag Silver for a couple of $2 billion, which is a nice bolt-on kind of acquisition there. Pan American gains a big, high-quality mine, and presumably their cash flow goes up more than enough to pay out that $2 billion purchase price. At the other end of the spectrum, I'm not sure what this means, but Dolly Varden, which is a promising exploration company, not even a producer yet, they have property next to Hecla's property in the Golden Triangle in British Columbia. And the thinking was that Hecla would come in and buy them out at some point and then make a district-scale mine out of all of that land. But instead, Dolly Varden bought out Hecla, and they've bought a couple of other properties in basically the same period of time. So what they're going for is district scale, but they're doing it by rolling up other properties, starting small and getting big by acquiring other properties. So that's interesting too. That's unexpected. I thought Dolly Varden would be a takeout candidate this year sometime. But instead, they're kind of the acquirer now in a lot of cases. And so we'll see how that plays out. I think it means that they're bigger and more valuable, but it's going to take longer to explore the massive land package they have before they come out with a resource that defines just how big and how valuable they are. So I think the time frame got longer, but the upside got higher with those guys. So anyhow, stuff like that is happening in the mining industry now. And that means that, as an investor, you've got interesting choices because the big guys are reporting really nice quarterly earnings. The fourth quarter and the first quarter so far have been big increases year over year. And there's no reason to think the next couple of quarters won't be the same way. And that's going to attract generalist money. Like if you're not a mining investor, but you hear good things about gold and silver and you go to your financial planner and say, give me some gold stocks or whatever, they'll buy the big names. And so those companies tend to go up first in this kind of a bull market. And the fact that they're reporting really good quarterly comparisons helps a lot because that attracts a lot of generalist money. So you can buy those guys and then do quite well without a lot of risk. Or you can go further down the food chain and look for those acquisition candidates like Mag Silver. Mag was bought out for 20% over the low of 2 weeks prior. So not a massive premium, but still a nice little pop, a nice thing to have happen. And there are a lot of mags out there in the precious metal junior producer space that could be taken out in the same way. So maybe you want to look for them.
Despite promises to cut spending during the campaign and his first few months in office, President Trump's federal government has spent more than $200 billion more in his first 100 days compared to the same time period last year. Experts, including John Rubino, particularly mention that Trump's first term was largely stifled by inexperience, bad advisors, and political warfare, but now he's cutting major Middle East deals and showing diplomatic pragmatism. Economically, he warns a financial crisis is inevitable due to massive debt. However, progress on global trade could cushion the blow, yet a currency reset, possibly gold-based, may ultimately be necessary. Gold has risen in 2025 amid uncertainty over the Trump administration's tariffs on major trading partners. Moody's downgraded the U.S. sovereign credit rating on Friday due to concerns about the nation's growing $36 trillion debt pile. This move could complicate President Donald Trump's efforts to cut taxes and send ripples through global markets. Moody's first gave the United States its pristine AAA rating in 1919 and is the last of the three major credit agencies to downgrade it. Let's get back to the interview.
Trump's first term, in retrospect, based on what we're seeing now, his first term was very uneventful. Really not that much happened other than he named 3 Supreme Court justices, which is very consequential. But beyond that, he was hamstrung, first time around, hamstrung by the fact that he didn't know anything about government. And he basically just named a bunch of swamp creatures to run his departments and advise him. And they basically told him just business as usual. And he was hamstrung by the Trump-Russia collusion hoax, which tied him up effectively tied him up in court for the first couple of years of his administration. And then the pandemic hit, so he really never had an actual Trump term. And then when he got voted out of office, he had 4 years to think about what he would have done and to talk to people and get advice and everything. And so he has totally hit the ground running this time around. And now, as we're talking, he's over in the Middle East just doing deals with everybody in sight. And they're falling in love with him over there because he just did a speech where he said, listen, you guys are doing fine on your own. And the nation builders and the neocons in the West should have never been involved with you. We never should have messed with you the way we did. We should have let you chart your own course. And now you're doing that. And look how great everything is. And so they loved hearing that. So he's doing massive deals, close to $1 trillion deals with Saudi Arabia and UAE. And he's talking about doing deals with Iran, which avoid the whole World War III scenario in the Middle East. So this is all really encouraging stuff. And it's fun to see this guy who just loves doing stuff like this, going around and cutting big deals with people, actually get to do what makes him happy at the same time he's helping the world so far. Anything could happen going forward, but so far so good with Trump. He's accomplishing a lot of stuff in a very short amount of time. And, most of what he's getting done is by and large good. The border is closed and RFK Jr. is doing a lot of really interesting things with the public health system. Trump's doing a lot of geopolitical things that are, so far very encouraging. So, I give him an A- right now. And the minus is because there's a lot of chaos that's gone along with the things he's done right. But the things that he's done right so far have been very important and very consequential. Well, there's a couple of big currents out there, and they're kind of cross currents. They're pointing in different directions. Because on the one hand, we already baked a financial crisis into the cake by borrowing insane amounts of money over the last 30 or 40 years. So there's no way we get pain-free from here to healthy organic growth that's sustainable going forward. There has to be a lot of pain. There have to be financial crises just because of all this debt. So that's there. And then the tariff thing was really chaotic at first. But it looks like countries are lining up to do a basic framework deal where everybody cuts their tariffs down to some low level, and then they negotiate away a lot of the non-tariff trade barriers that exist right now. So we end up with an almost free trade world, it looks like, because Trump is willing to go nuclear from the point of view of trade policy. And countries are seeing doing a deal with Trump as the lesser of two evils right now, because the U.S. is the world's biggest market. So Trump has massive leverage when it comes to a trade war with basically anybody. So the deals seem like they're about to start getting done. There was one with the UK just lately here, and China and the US, at least the US is saying that they're making progress and they can see the outline of a deal in the not too distant future. So when stuff like that starts happening, that's a stabilizer for the global economy. If we get past these trade wars and enter a time when our trade relationships are mostly understandable and not too brutal for anybody. So, trade is a doable thing. That's good. And so that leaving aside the big financial crisis that's coming that we can't avoid, we're making progress on the geopolitical / trade side. So I don't know which of those things dominates in the year ahead. It could be that interest rates on everybody's debt, they're high enough now to cause debt service costs to be debilitating going forward. Like the U.S., we're at $1.5 trillion, right, of interest on the government's debt alone, let alone student loans and credit cards, et cetera, et cetera. And that's all recessionary. So it wouldn't be a surprise if we still do have a recession in the second half of this year. But, that's normal. Recessions are normal. And if we can keep it from metastasizing into something much bigger that necessitates that currency reset, then things won't seem historically crazy. It'll be stuff that is familiar to everybody. But that currency reset is still out there. There's no real way to avoid us having to do something with the global monetary system. But as bold as Trump has been lately, it wouldn't be that big of a surprise for him to just get up one day and say, all right, time for a gold standard or something, some other kind of monetary system that is sustainable going forward. So it could be that the way all these other things are happening kind of on internet time right now, where we do things that used to take years and weeks, maybe the currency reset happens in the same way. We'll have to see. Anyhow, I'm throwing out a lot of possibilities here. And the reason for that is that there's no way to know how this plays out in the short run, because all of this stuff is, in one sense, historically unprecedented. And in another sense, it's not clear whether it's deflationary or inflationary. Tariffs, they raise the price of things in the short run, but if they slow down economic activity, then, that's deflationary. We can't know how all this stuff plays out. So, what I'm doing with my own money is just focusing on the stuff that's baked in the cake. We got to have a financial crisis. The big currencies of the world have to be inflated away in order to prevent something much more serious in the moment from happening. And so that's got to happen. So invest for something like that, which is to say gold and silver and other related equities that tend to do well in an inflationary period. And then just recognize that, the rest of this stuff is just unpredictable. We can't say how it's going to go, certainly not in the short run. And don't place big bets on one side or another of a lot of the non-monetary crisis possibilities out there, because they are inherently unpredictable.
Political leaders now openly entertain ideas once seen as fringe, like a return to sound money. As uncertainty mounts, the appeal of tangible, trusted assets grows stronger. If Trump were to pursue a gold-backed system in the second term seriously, would it spark global monetary reform or trigger financial chaos before stability emerges? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.